guys, welcome back to another week of Mortgage Matters in Minutes. I'm your host, Brent Rasmussen, owner of Mortgage Specialists. Thanks for watching our 200th episode, and continue it each and every week to be educated in regards to the mortgage process and how mortgage affects real estate and the entire aspect of real estate, making sure that you're looked after and educated to make sure you're getting the best loan or situation for yourself. So today is a very common question I get a lot when I teach courses. I wasn't sure if you're aware, but I spend a lot of my time in the community teaching continuing education, but also teaching education to high school students, collegiate students, and people that are working to get into the industry and those that are already in the industry. And a lot of people will ask, where should I go to get my mortgage? Where should I go to get a mortgage? And there are a few different options. Here in Omaha, we're very lucky. We have lots of great options. And across the country, there are lots of options, but when you give consumers options, that unfortunately maybe causes a little bit more stress, a little bit more choices. And with that, it's where do I go? What do I do? So we're going to talk about the different choices and where you can go, and talk about maybe a little bit of just differences between each one of these options. Obviously, the first institution that people think of when getting a mortgage is going to their bank. Well, some banks are really good at the mortgage department. Some banks are very, very large and don't have really someone local that you can approach. You might deal with someone on an 800 number line, but lots of local banks will have individual loan officers here in the Omaha community area. So I would always suggest working with someone that's local, even if the bank is across the country. If someone is here in your community, that's a person that you want to deal with. Working with someone across the country obviously comes with challenges, time frame, communication, also understanding how our local market works, different things of that nature, and response time. We've seen sometimes some problems with people out of town, but that's not only banks. That can be mortgage companies as well too. Besides going to a bank directly, you might also have your money at a credit union. Credit unions also offer mortgages. Some credit unions are very big, some are very small, some have very experienced loan officers, and some of them refer the business to someone else out of town. So again, if you're working with that particular institution locally, that's where you want to be with. Both banks and credit unions are going to offer the same loan products and types. We'll talk about the other two providers as well, but all of the providers that we're going to speak about here offer the same types of loans. It's very unusual for a particular company to not offer a certain variable kind of loan that exists in the market. Maybe there's grants or something else additional where banks and credit unions have a much bigger access to those when it comes to standard loans like Fannie Mae, Freddie Mac, FHA, VA, as we've talked about. All the mortgage companies that we're going to speak about offer this. So credit unions are also a very great place to go. What's unique about a credit union is you have to be a member to access that. That's usually pretty easy. Having a bank account is all you have to have. And many times credit unions will offer certain incentives to their members only type of scenario. So the next person you can get your mortgage from is a mortgage lender, a mortgage company, an independent mortgage banker is what they're also called. A lot of these people that don't have an affiliation directly with a bank or a credit union, and they might offer their own mortgage product or their own mortgage name and company and solutions. Someone like that might be a Rocket Mortgage. Someone like that might be a Loan Depot. These are independent mortgage companies that don't have a bank charter or a credit union charter. Mortgage Specialists is the independent mortgage company. That's what we are. We fund our own loans. We act as an independent to all other entities, but we also can work through many different lenders, banks, institutions to administer your mortgage loan. Then lastly, you can go through a mortgage broker. Mortgage broker is also thought of as an independent mortgage banker or a mortgage company, so on and so forth. Mortgage broker basically brings together a lender and a buyer and receives a fee for doing that. And a mortgage broker has many different lender options to go through. And we started as a 100% mortgage broker and worked into an independent mortgage company. Doesn't really make any difference. What I can share with you is all these different entities. It's going to come down to the loan officer you're working with on how much they know the products, how much experience they have, so on and so forth, because most people think only shop interest rates. And I can share with you all the different entities we've talked about are going to have pretty much the exact same interest rate. You call 90% of them, 90% are going to have the exact same interest rate. Maybe 10% in there, someone will have a little bit better of an interest rate here or there, but it's not a common phenomenon. I can share that we talk to mortgage loan officers in my community all the time, probably almost every day. And we compare and chat about clients and interest rates and scenarios and what's happening in real estate. And we're all in the same boat offering the same programs. So for you as a consumer, doesn't make a difference exactly which particular company you go from. All of us are going to have very similar scenarios. The different interest rates, different fees, not so much. Those two things should be pretty well controlled because the money that we're all accessing comes from federal loan programs. And yes, certain lenders, mortgage companies, banks, credit unions can adjust up or down that particular interest rate. But if we all want to be competitive, we're all offering the same situation or interest rates in regards to that. I can't guarantee you that there isn't some company out there that's going to be offering some significantly lower rate for a short period of time or another, but it's impossible out of the thousands of lenders across the country to find that one company that's going to be giving out that incentive that particular day of the week. So what I've chatted about through the years is talking with your mortgage loan officer, not necessarily the institution you go through, and find out what do they offer for programs, probably all of it, all of them. How competitive are they with interest rates? What are their closing costs? They line up with the market. You know, again, all of us are going to be very similar, and it's going to come down to the experience, service, and availability, just as well as the rate. I know is important, but having other factors in why you're choosing to work with someone, whether they're responsive, whether they're accountable, whether they get you the answers simply and make the process as easy as it possibly can, are usually the reasons you want to pick a particular loan officer. Because if 90% of all the mortgage institutions offer the very similar interest rates and closing costs, why not get everything else that comes with it for free? So I'm Brent Rasmussen. Love to answer any of your questions anytime at 402-991-5153. Or you can check us out on our website at mtg-specialists.com. And we look forward to seeing you here next week, same time and place, being educated on any kind of mortgage needs and questions that you may have. Have a great rest of your week, everyone. Mortgage Specialists. Driven, trusted, reliable.